Indian stock markets staged a strong recovery in the past week. India is one of the first major markets in the world to reverse losses from Trump's Liberation Day announcements. What does that signal for the future of Indian stocks? That's what's next in this report.
India's stock markets are showing remarkable resilience in the face of global volatility, becoming the first major market to fully recover from losses triggered by US President Donald Trump's tariff announcement on April 2nd. The NSE Nifty 50 surged as much as 2.4% earlier this week, breaching its April 2nd closing level and sending a strong signal to global investors. This rally, fueled by optimism around domestic economic stability and favorable technical indicators, comes as other Asian markets remain subdued. A key driver of investor confidence has been India's position as a domestic consumption-driven economy, relatively shielded from global trade disruptions. With just 2.7% of US imports coming from India, the country's limited direct exposure to US tariffs is working in its favor. Strategists and fund managers are increasingly viewing India as a safe haven amid intensifying US-China trade tensions. New Delhi's conciliatory stance and prospects of a bilateral trade deal with Washington have bolstered sentiment. Lower crude oil prices, a strengthening rupee, easing inflation, and strong domestic earnings are also aiding the bullish trend. Foreign institutional investors, who had been net sellers for months, are beginning to return, targeting quality large-cap stocks. Broader indices like Nifty Mid-Cap and Small-Cap also gained. Experts say the market could continue its upward trajectory if global sentiment stabilizes. However, caution remains due to potential overnight risks and ongoing tariff uncertainties. For now, India stands out as a bright spot in an otherwise jittery global market. Bureau Report, WION, World is One.
Mr. Jayant Krishna is a senior fellow at the Center for Strategic and International Studies. Mr. Krishna is now joining us live from Delhi. Sir, thank you very much for making time for us and welcome to the broadcast. Mr. Krishna, amid global tariff tensions, in your view, what makes India resilient?
See, if you really look at, our two major, indices of stock exchanges, they have surpassed the Liberation Day shocks of 2nd April, and they have. So I think one reason why India is resilient amidst global tariff uncertainty and tension is that almost 60% of our GDP actually accrues from domestic consumption. It's a very, very heavy domestic consumption vis-a-vis the other major economies. And not only that, our trade to GDP ratio is about 46%. And if you remove the services out of it, and keep only goods, then the trade to GDP ratio becomes 32%, And the overall exposure to US exports is also limited, and if you look at, international trade is never about, the lowest cost of manufacturing or absolute advantage. It's about relative advantage. So if you look at the tariffs, imposed by the US on other countries, with which India competes in its exports to the US. Let's look at China. 245%. Of course, this is not stable. It will eventually come down, but currently it is 245%. If you look at, Bangladesh, it is 37%. Indonesia, it is 32%. Japan, Malaysia, South Korea is about 24-25% range, and Canada, Mexico as well. Sri Lanka is 44%. Switzerland is 31%. Taiwan is 32%. Thailand is 36%. Vietnam is almost 46%. So, vis-a-vis these countries with which we largely compete for our exports to the US, I think we have a relative advantage. Even if you look at European Union, it's about 20%. So the difference between 26% of EU and 20% of EU and 26% of India is not all that huge, So I think these are the reasons, because of which, we are relatively resilient, despite what's happening in internationally because of the liberal, on 2nd of April, the kind of tariff war which started,
Mr. Krishna, now that you've mentioned the domestic factors are the ones which are outweighing global risks in India's rally, which sectors are best positioned to benefit from this momentum going forward?
See, I would feel, pharmaceuticals, because, there is no additional tariff announced on that. FMCG should do well. Electronics, because, there's a freeze on tariff announced on electronics. That's another sector. Apparel, because if you look at the apparel industry vis-a-vis the countries that we compete with, like Bangladesh, Sri Lanka, and so on and so forth, their tariff structures are much higher. So that's a huge opportunity for us, and those sectors should do well. I believe even food products, I think, we should continue to do well. Not so good would be the metals, or anything which is a commodity where the margin, the gross margins are low. Gems and jewelry, I'm not very sure. So I think these are the sectors which will do well or not do well, in next few months,
Mr. Krishna, finally, how far can this rally extend? Do you see benchmarks hitting new records high this year?
See, it is difficult to say, but one thing is for certain. If you look at COVID, there also India had a huge opportunity because everybody talked about the global supply chains, terminating, not laying all eggs in Chinese basket, and China plus strategy, a lot of MNCs adopted. India could take advantage of that, but not to an extent it should have taken, because of factors like ease of doing business, because of regulatory issues in India, and so on and so forth. But now the opportunity which the new tariff rates have thrown, those opportunities are not as much for government to garner. It is actually for industry to respond, and industry is more responsive. And the velocity of reaction is much faster when it comes to industry to seize those opportunities. So I see, going will be good. It will remain a bit uncertain. A lot would depend on the bilateral trade agreement that we eventually have with the US, for which a deadline of September 2025 has been set in. A lot will depend where this 26% of tariff imposed on India eventually settles at. So I think it depends on that. But one thing is clear, the last year's peaks in the stock market, which India saw, may not be seen this year. My advice to investors would be they need to stay invested, not panic, they'll be shown no panic, selling and so on and so forth. You can modify your holdings to some extent, in the sense that if you are saddled with some not so good stocks, those you can change. But by and large, one should not desert the market and stay invested. That's what I feel, because there are some uncertainty, but I don't think there'll be huge shocks in store for India, given the fact that our negotiations with the US on the bilateral trade agreement is at a relatively advanced stage, and it started much earlier.
All right. Mr. Jayant Krishna, we'll have to leave it there. Thank you for talking to us today.
Pleasure.
For all the latest news, download the WION app and subscribe to our YouTube channel.